Can this market rally continue like what we have seen over the last 3 weeks since the Federal Reserve bailed out the bank stocks? Well, there's a lot to go over here. We're going to go over the technical analysis on the Qs. We're going to go over some other specific charts that will be very key in helping to determine how long this rally can continue to last and what our expectations should be going forward. First, make sure to like and subscribe to this channel down below. Make sure to also click the like button, or the join button actually, to be able to get all of my stock market research each and every day for the members only. Now, this is a really good bullish chart that we're looking at with the Nasdaq. You might remember people are already talking about we're back into a bull market, technically speaking, from a definition standpoint on the Nasdaq 100. We rallied 20% off of the lows, but more importantly, it's not so much the definition that people get hung up on, but really the chart pattern here that's developing. And first off, you have this cup and handle pattern that is formed. It's already broken out of it. As you can see, the price is trading above this purple line right here. But the cup and handle pattern, it looks just like a cup and a handle. This is the cup. Then you have the handle. It's breaking out. That's a big move. Now you also have all the other moving averages. You got the 50, you got the 20, you got the 10, and you got the 5, all moving higher as well. The 200-day remains flat. That's more of your long-term trend line. So there's the potential here for this to be a short-term move, but not necessarily a long-term move. Then you have the rising trend line off of the January lows. That's also in place, and it's quite detached from it, and we'll get to that more in a second. Also in play is this declining level of resistance. It's already broken through that as well. So you have 2 layers of resistance that price is broken out through. Now, going forward, yes, this could be a layer of resistance as well when it tests the highs from August. But overall, this is a very bullish move. The problem, though, is that if you look down here at the right-hand side of your screen, you're seeing stochastics levels of 96. On the weekly, it's also pretty overbought. The weekly is showing a level of 97. So it's very, very overbought, especially when you're seeing the same kind of readings on the weekly as you're seeing on the daily. Very overbought. So you have the bullish breakout on the cup and handle, but I'm not so sure that this can really last without some kind of a pullback or some kind of consolidation going forward. It's been an incredibly bullish market, but you can't keep pushing higher and higher and higher every day like what we've seen without some kind of a pullback or some kind of consolidation. So today, yes, the market pulled back, but would you necessarily call it a pullback when it closed right near the highs of the day and had another monster rally in the last hour and a half of trading? Not really. I mean, it does help. It's better than it continuing to put on another 1 or 2% in gains. It does help to cool it off to some degree, but like I said, it's still at 97 on the stochastic, so it's still very much overbought. What ideally you want from a bullish standpoint is for the price to simply consolidate above this purple line here. That would be the cup and handle confirmation level. For it to pull back, test it, hold it, maybe even consolidate there a couple days, and then start the uptrend again. That would help alleviate some of that buying pressure that we've seen materialize over the last week or so, and then also give it a little bit of breathing room to start that next leg higher. How does the Nasdaq or the volatility index for the Nasdaq look? Right here you can see we're at pretty strong lows here, and there's been some reversals off of those lows over the past couple of months. We've seen it over in January, and we've seen it in February. So be mindful that as we're sitting at 23 on that VIX, not only that, but if you look at the other more widely followed volatility index from the CBOE, we're sitting at 1855. So we're at very, very depressed levels there where we've seen some monster reversal. So the other thing that I want you to look at too is that while the Nasdaq looks pretty impressive and that it's just starting this breakout, like I said, it's overbought, and you can see it more so in the stocks that influence the Nasdaq 100 the most, namely Meta. And we'll go through these really quick here, but you can see, again, we're at 98 stochastics on Meta. You're seeing a rally. Let's just look at it from a weekly standpoint. This is a huge, huge rally that we've seen off the November lows going from 88 to 203. That's over 100% rally. You take Amazon. Not as strong of a rally, but it's still a pretty decent run over the last 4 weeks. But then you take Apple, and this is probably the biggest concern that I have on Apple. You have this huge declining layer of resistance on Apple that essentially price is testing as of today. Now you take the monster rally from August, you take the monster rally from March, and each time there has been huge runs into this layer of resistance, but then it sharply reverses and makes new lows. So there's the possibility that that's going to play out again here on Apple as it tests this upper range. It needs to break out of that level. And then you got Netflix, another huge rally here. Best seen, this is the weekly, but this is the daily. This daily run off of the March 13th lows, it goes from 286 up to 350 almost. Another big rally of over 20%. So you're starting to see the trend here. It's just a lot of euphoria, and it's probably best seen in the stock price of NVIDIA. Now, NVIDIA has gone from, since the beginning of the year, from $140 around a share to $279. That's pretty much 100% return since the beginning of the year for NVIDIA. So you can see, I mean, Tesla is the same way. If I can actually type it right, Tesla has gone from a low of 102 up to 194, and at one point it was up over 100% as of Friday's close. So the other thing that I would say too is Apple and Microsoft, they're the two biggest stocks in the Nasdaq and the S&P 500. They represent about 25% of influence on the Nasdaq 100, about 13% of influence on the S&P 500. Both, like we already said, with Apple, it's touching this layer of resistance above, and then with Microsoft, you also have this rising channel here, and what is it doing? It's testing that upper channel band. So it's struggled a little bit today, but there's a good chance that with it testing this layer of resistance that it starts to pull back some. So there's definitely some things to be concerned about going forward. I'm not saying that the market can't keep pushing higher, and maybe it hits new all-time highs by the end of the year. I don't know. But to start chasing after it at this point in time, to start YOLOing your money into the NASDAQ might be a little bit foolhardy until it can pull back to consolidate some, or just take a breather. And that's going to be hugely important. Now, the final chart I want to show you is the technology chart. This is XLK. And really good rising trend line off of the January lows. But again, it's becoming a little bit detached there and may need to pull back. You also have a pretty significant layer of resistance going all the way back to April of last year that it will need to try to break out of. It tried to break out of it on Friday. It wasn't quite able to do so today. So that's going to be also another major test point for the bulls. So if you enjoyed this video, I would encourage you again, make sure you like and subscribe. The bottom line is that we have to make sure that we are not just YOLOing our money into trades now just because it becomes very obvious that the market's wanting to go higher, because it's at those very pointed times where the market seems the easiest, where it seems the most obvious that it tries to pull the rug out from underneath you. And so it's best to wait for some of these conditions to cool off some, wait for the price to settle down. Maybe it does a little bit of a bull flag or a little continuation triangle, but wait for something to happen for it to pull back to provide you with better reward risk ratios on the individual trade setups. Thank you guys, and God bless.